Welcome back to another episode of Real Estate Stories. Today, we are going to teach you and help you understand what the heck does a title company do? You've heard the term, you know they had something to do when you bought your house or even potentially when you sold your house. But what do they do? Why are they important? And do you really need a title company? So you do, by the way. So today we're going to have a conversation with Mr. Justin Steinberg. Welcome, Justin.
Thank you, Robert. Happy to be here.
Justin is one of the founders of Core Title, which has multiple offices in multiple states. They've been around since 2011, and I've been fortunate enough to be doing business with them since literally they opened the doors, and they do a wonderful job. But this is not a commercial for Core Title.
You're doing such a great job, though, Robert.
This is really to help all you guys who are watching this who have no idea what title companies do. I invited Justin on the show because I think I understand it, but in any given week, sometimes I'll call into the office and go, wait a second, what? Because there's so much that goes on behind the scenes, right? Here's what I know, Justin, and please run with this a little bit. Here's what I know, that as a title company, besides hosting the closing and having a lot of awesome pens, because there's a lot of signing that goes on. There's never a shortage of pens, am I right?
Never.
Okay. So, yeah, you guys have orange and white pens. You guys have a lot that you do from the point a property goes under contract and then to the point that there's a closing. And that's a huge responsibility because you talk about hundreds and hundreds of thousands of dollars being exchanged, millions sometimes, and coordinating the funds from the mortgage company, funds from going to a seller, funds coming from a buyer, making sure the liens are extinguished, like all that. Kind of give us an overview of what actually goes on at a title company, please.
So Robert, you hit the nail on the head when you kind of said behind the scenes. If most people remember their title company, it's normally not a good thing, to be perfectly honest. We do our work behind the scenes, and we work seamlessly with both sides of a real estate transaction. So both the buyer and the seller, if there are two agents involved, if there are two attorneys involved, certainly with the lender, we work as the central party of a transaction, kind of being that glue that makes sure that all the monies that pass through from one party to another are handled appropriately, that they're prorated down to the penny, and that the new homeowner, when they take possession of their property the day of settlement, that they own their property free and clear, 100% themselves, with no other liens or judgments attached to the property. So if I could go and go on a second, that behind the scenes work, we basically act as detectives, and we'll use county records, things that are recorded at that level. These things are mortgages and liens, which generally are recorded and attached to real property for the simple reason that they're expensive. They're an old mortgage, a second mortgage. If somebody refinanced or financed the vinyl siding on their home or some other home project, big ticket items, 5, 10s, 20, hundreds of thousands of dollars, those things, to make sure that somebody gets paid back, they'll attach a lien or a judgment to the property. And those things pass from one owner to another. So you want to make sure they're all freed up and cleared. So when you own your property that day of settlement, you don't have anyone else's older problems coming with.
Well, yeah, you made it sound so simple in a way, but I know in reality,
it's not.
Yeah, every single property is different. I'll give you a great example. So I was on a listing appointment a few months ago, and it was an estate, right? And sometimes those can be challenging too. And
these past few years especially, they've been even tougher.
Yeah. In talking with the sellers, it was like a bunch of adult siblings. I always ask, do you know if mom or dad had a mortgage on it? I mean, they had owned the property for like 50 years. So that's usually good. And they said, well, they did when we were kids, and I remember though that I remember them paying it off because they were so excited, and we had a cake, like when they were little kids, The house was paid off. I'm like, well, that's great. When you're cleaning out this house, if you see anything house related, any documents, even though you may not know what they are, put them aside in case we need them. And they said, sure, no problem. And I said, what I'm going to do for you also, and I offer this service to a lot of clients, is we're going to run a last owner search because we don't want any surprises later. Sometimes there's surprises, right? Sometimes
absolutely.
So your team ran a last owner search and they saw 2 mortgages from way back, like in the 60s, I think they started. And it started off as like a private mortgage. Then it went to a tiny community bank in Philadelphia. And long story short, they were never discharged.
And that's you're again hitting a nail on the head. Whereas the same way there's a process that you have to go through to attach these liens and these mortgages and these judgments to real property, there's a process to go and remove those judgments as well. There's a proper way to get them discharged from the county courthouse. And if a particular procedure is not followed through the correct way, those remain open and they may have been paid off. And there's processes and ways to go about helping to get them removed, to remove those clouds on title. But again, the older you go back, and the way to do that can just be time consuming, but the right way to do it needs to be followed in order to make sure that you have free and clear title for the new owner, no matter what the circumstances were.
And just so you guys know that are watching this, we're solving this issue with Core Title's help. We actually ended up subcontracting to a third party, basically through the help of your team, that can really dig in and really take that detective work to another level and kind of follow that file as that loan got passed along from one institution to another, because we know that happens. And literally, Colleen and the next person, whoever this other person is that's helping her, tracked down the individual who can sign off on the discharges. Like, it's crazy. It's taking 3 months. So I'm glad we didn't put the house on the market, because we knew we had to we don't know how these things play out sometimes, right? It's some of the stuff we deal with. Now, here's one thing. Tell me if this is crazy. I think that one of the changes that I've noticed over the years in buying and selling real estate and investing in it myself is that years ago, when we'd pay off a property, we would get the discharge letter or the letter of satisfaction, whatever you guys call it, whatever the lenders call it, in the mail. And there'd be like a cover letter from whatever the lending institution was. And it might have even said, now you have to get this recorded. But I think years ago, a lot of the lending institutions didn't record them for the homeowner, but then the homeowner would take that information.
They think it would be done.
Yeah, they're done.
Yep.
They may or may not ever know where that paperwork is years later. But I think in the more recent years, maybe the last, call it 10 or 12, it's different. I think a lot of the lending institutions do take care of the recording. Am I wrong? Am I crazy? Is it just...
It depends on the lending institution. A lot will take care of it themselves, or the people who are then getting the proof, the title company themselves, or a third party in that instance who might obtain a certain document for us then to go and record. We'll get our hands ourselves on the documents, and everything's e-recorded for the most part these days, but we'll be the responsible party to get that recorded and make sure that, that old mortgage or whatever the happenstance may be, that it is properly removed for the current party and obviously for future owners as well.
So what kind of liens can there be? Let's think about this, right? The obvious are mortgages or lines of credit, right? That's pretty obvious. Those are liens on a property. I just made a couple of notes while you were talking. Solar systems are liens on property. That's UCC
correct.
Lien, right?
That's correct.
So what makes a UCC lien different than like a mortgage lien? Or from your standpoint, it still has to be handled.
It's from our standpoint, it's simple. It's something that's attached to real property and needs to be handled, like you said. They generally get subordinated, so they're a little different in that stance, where they're not going to be first position like a mortgage would be.
Good point,
so that's a subtle difference. But going into what the other liens are, I mean, there's mechanic liens, which are involved with new construction. A big popular question that we'll get from new agents or others who are learning about our industry and don't know what title insurance is: if they're buying new construction They're thinking it's a brand new home. What can be attached to it? It's brand new. No one owned this home before me. I'm the first. What they don't realize is that with new construction, sometimes, depending upon who the builder is, builders can get into trouble. They have subcontractors, plumbers, electricians who are doing certain work to ensure that those subs get paid and make their money. They can attach liens to that brand new property. So those things also need to be handled prior to even buying a brand new home. Real property is the property attached and the land itself. So the land that the home sits on, all of these liens and judgments gets attached to that. So the land beneath, you also need to make sure that it doesn't have anything coming with it. In most cases with new construction, the builder already handles some of that, but you don't want to come and have to handle some of the builder's old bills when you're buying a brand new home from them.
But I'll take that to another level. It doesn't have to just be new construction. In reality, if a homeowner gets into a beef with a contractor can actually go to the courthouse and file a mechanics lien pretty easily, right?
Absolutely. And those, very, very easily. It's just a little bit of time. It doesn't take much, a small recording fee at the county level, but those mechanisms are in place to ensure that people get paid what they're rightfully owed. It's one way that, these contractors can make sure that they're paid. And obviously they might not get that money until somebody goes to refinance or sell the property. But the next time it changes hands, or if that refinance occurs, they're going to be ensured that they're getting the money that was owed to them for the work that they did.
Yep. Homeowners associations, if you're behind, they have a right to lien the property, right? For
Absolutely.
HOA fees and
tax liens as well. You can't get behind in your taxes.
Yep. Those are liens. I made a note here too. I had a client recently that she had some kind of a leak in her house at some point, and she contracted with one of the big, water cleanup companies. And there was some sort of an issue between them and the insurance company and who was paying. And she was really confused by the whole thing. We did a last owner search on that house. And guess what?
Something was there.
That remediation company had a nice fat lien on there too. Yeah. Yeah.
That's what people, it's funny, Robert, how often people just think, all right, if I bury my head in the sand and if they stop sending me stuff in the mail, or if the phone stops ringing, maybe it's just gone away. But in most cases, you're not that lucky. People find a way to get the money that's owed to them, and attaching these liens to real property is one way that they do that. And we certainly are there to sometimes be the bearer of bad news, uncovering these things, but it's a part of the process of either buying a new home or refinancing a property. You do need to clean up all of these liens and judgments.
Yeah. Wow. Okay. So let's kind of walk through this, right? So you guys have to do, property goes under contract. You get called in as a title company. You have to start investigating, right? You have to, through your systems and tools, you are checking the history, ownership history of the property, checking the lien history of the property, and checking actually the history of the participants of the transaction as well, right? To see if the transaction participants have liens against them.
So that would be a buyer search, so to speak. We generally are researching the property that's getting transacted. So the property that is being sold, right? The property that's being sold by the seller and then being purchased by the buyer. Every once in a while, we don't require it, but a certain lender, the new lender, the person who is providing the mortgage for this new purchase, they might require a buyer search, and we'll have to go and make sure that despite whatever they found on maybe the credit report, to make sure that there's nothing else, no other liens or judgments against the individual. It's more rare. In most cases, we're just worried about the liens and the judgments, the upper and lower court searches for the property being sold. That's primarily what we see and what we do for the majority of our transactions. Yeah.
Okay. And all of this really is part of the goal, which is and correct me, please, if I make a mistake, because the goal here from your standpoint as a title company is to be able to issue a title insurance policy, right?
Correct. Correct.
That's the end goal, right? And
absolutely.
Yeah. And the thing about title insurance, and I tell clients this all the time, is because they'll see it on their settlement statement, it's a one-time fee, right? You don't renew it like for your car or for your home.
I was just going to go in and say, again, it's a unique form of insurance in that you pay for it once, you pay for it there at the day of settlement, but you have coverage for the entire time that you have the property. Unlike your automobile insurance or health insurance, where you have a monthly payment and you have annual renewals. That's only going to happen when you come to go and purchase another property, and that property leaves your hands and goes into another. We're basically also, it's unique in that you're insuring into the past, whereas most insurance insures future issues or accidents that may occur. We're going backwards through the records and ensuring that nothing was missed. And in most cases, it's human error that can misfile something at the courthouse. Maybe there's a relative or some family member that just didn't get their piece of a particular property when it transferred hands way back when. Those are all the different small nuances that we have to uncover and make sure that everything was done the right way, that anything was discharged the right way, that the new person who's taking ownership of the property, that they own that property free and clear, 100% themselves.
So, for example, I go to sell my house. Let's say I own my house 27 years, right? And I had title insurance. I go to sell my house, and the buyer's title company does their research, and they find that 38 years ago, so before I owned it, there was a lien from some old mortgage that popped up. It wasn't an issue when I bought the house. At least it didn't appear to be, right? I bought a home, title insurance. And then 37 years ago, so in my example, that's whatever, 10, 12 years before I even bought the house, that was recorded, whatever that, we'll call it an old mortgage for our conversation. So now, like, what happens in a scenario like that?
You'd have a claim on your hands, and you'd have to start that process of filing a claim. But you did yourself a service by purchasing a title insurance policy. And in this case, it sounds like your title company had missed something. Something was not uncovered appropriately, and that's a legitimate claim. You'd go back to the title agency who issued your policy, and you'd start that claim process. And no matter what that figure was, whether it was a $5,000 or $10,000 UCC lien, like we were talking about before, or maybe it was a $250,000 second mortgage. Doesn't matter what it is. If it was missed, you have a claim, and your title company would be responsible for removing that cloud from title so that you'd be able to go and sell the property free and clear of it to the next owner.
So I have a claim, but in reality, I don't process the claim. The previous title company, or the title company that facilitated my purchase, handles that with the insurer, right?
With the underwriters involved.
Okay.
So every single title agency across the country, they write for underwriters. We at Core, we write for First American, which is one of the largest title insurance providers in the world. But yes, the agency who issued your title policy, along with their underwriter, the underwriter who issued that policy, would work together to go and handle that claim. So you would be able to go and sell the property to the new owner without that judgment attached to it still.
All right. We're going for double jeopardy now. I'm going further.
Please.
With this. You ready?
We're on a roll.
So here, I'm going deep because I've seen this happen too. All right. Because I've had it happen in the course of a transaction more than once, unfortunately. Number one, it's a two-part question. What happens if I can't find my title documents and I don't know where they are, or can't even find a settlement statement, so I don't even know? And like you said, people don't even remember the title companies, right? Because in my example, I said 27 years ago I bought the house, right? So that was a long time ago, right? And then what if I can? It's kind of two-part. What if I can? But that title company isn't even around anymore. They're gone.
Exactly right. And that happens more often than you think. This is why the agencies themselves, the title agencies, write for the underwriters. The underwriters, there's I guess now still 4 primary underwriters: First American, Stewart, Old Republic, and Fidelity. Fidelity owns a number of different, also larger title companies like Chicago, Lawyers Title, etc. But those institutions are so large that they don't go anywhere. That paper, that policy written by that agency that may have gone out of business, is still covered by the underwriter who issued that policy.
Oh, wow.
So again, it's an extra layer of detective work that you'd have to do. And now, if you didn't have your title policy and you didn't have your back then, that probably would have been a HUD-1 or a settlement statement, depending upon how far back you're going.
Yeah.
But what we do, what we all would need to do to go and help rectify this is documents are recorded by the title agencies. So you can start to go and look at the recorded documents to see who may have recorded them, to start the trail of who then to go after. And sometimes it can be harder and more difficult. Depends on what the documents were and when you're talking about. Depends on which county we're talking about and whatever state that you're working within. Every state and county is different with the way they do things exactly. But we'd be able to act like detectives, go back and start to find out where that agency was. If we did find out that they were out of business and somehow didn't survive, you could then also tell who they wrote for, and you'd have a couple of layers to go and try to chase down to make sure that somebody was going to be on the hook for that issue at hand.
And it sounds like, based on what you said, there's really 4 big players up that chain of command. So it's really probably pretty much only 4 companies that it would land with at the very end. Right.
In most cases, this is not to go down a little bit of a nerdier hole, but those 4 big boys, the companies that I had mentioned, they're what you call like tier 1, A paper that the title agencies would write with. There's a number of tier B and tier C and lower level underwriters who might get into the business and let anybody write. But any reputable title company is going to want to write for one of the larger companies who have that strength, that time in business, to know that they're not going anywhere. In North Jersey, where attorneys still do a little bit more business and can control things, and certainly in other attorney-driven states, certain attorneys will only want to write with certain underwriters, knowing that they have the length of time on their hands, the strength to go and be a lasting company, and you're not going to have to worry about them folding, because if the underwriter themselves folded, someone would be out of luck with that policy. And they would lose that coverage. So it's important to ask, your agent or whomever else, ask a little question about the title company to find out who they're writing for, to make sure that you're comfortable with the policy that you're purchasing.
Wow. So there's so much. So let's just say, man, I could go on for hours, dude.
I'm not sure that everyone would want to listen to this for hours, but I certainly could do it for hours also with you. I'm a nerd that way.
So let's just try to put a transaction together, right? So we go under contract. Your team does their investigative work. They're checking the property. They're checking the parties to the transaction to whatever degree that they have to. Side note, really important, right? If someone's getting a mortgage, title insurance is absolutely required. If they're not getting a mortgage, if you're a cash buyer, it's not a requirement, but you'd be out of your freaking mind to buy a property without title insurance.
I always say I wouldn't let you're absolutely correct with everything that you said. And I wouldn't let my mother, my sister, any family member ever purchase a property without purchasing title insurance. It's always that one time that you think, why am I going to go and spend that money to go and purchase that policy? But that'll be the one time something happens. And just like we were saying earlier, if a problem does pop up, it's not something that's just $500, $1,000. It's thousands of dollars. There's a reason why there's a process to attach these judgments and these liens to real property. It's, again, to make sure that these larger figures are covered and that people get their money. So to purchase a property cash without a title insurance policy, to me, is just one of the more foolish things you can do in real estate.
Yeah. So I guess maybe if you have an enemy purchasing a property cash, you don't need title insurance.
Yeah, convince them, hey, you don't need to do that. Good luck with that.
Money there. Yeah, that's good. So you do all your work, right? Now, your team is, in many cases, holding the escrow deposit on behalf of the buyer. Could be $1,000, could be $100,000, whatever it is, right? Here's a question for people. Because Mason and I just made a video. I don't even think we launched it yet. By the time this launches, it might be launched. What happens? Let's say you're holding $10,000 escrow for the sale of this house right here.
Okay.
And Mason has a situation right now where a buyer has passed. He's passed his milestones. He's got his mortgage commitment. He passed through the home inspection. Title is well underway. No issues. And the buyer's really nervous and he wants to walk away. I mean, we're not attorneys, but what happens to the what if the buyer says, "Hey, Justin, just give me my escrow back." Can you do that?
We can't do that. We can only release an escrow when we have both signatures from both parties agreeing that
Yes.
something can get released. And again, you're hitting many nails on many heads, but we aren't attorneys. And starting to get into that arena, that's where attorneys would get involved, and a determination or an agreement would need to be reached between the attorneys. And at that point in time, when an agreement is reached and both parties figure out whatever's fair from a settlement perspective, an escrow release form would be signed by both parties. And that at that time, that's the only time we'd be able to release it. We can't release it with just one party's signature, one side of the argument or the issue. We would need both parties' agreement to release those funds.
Yeah, exactly. And obviously, I knew the answer to that question, of course, but I wanted to teach everybody that there are laws regarding escrow, whether it's being held by a title company, an attorney's office, a real estate brokerage. The same laws apply no matter who you are in the transaction. Could be the buyer and it could be your money. You could be the seller saying, the buyer's just walking away. I want to keep that money. Give it to me.
Not that simple.
Escrow, yeah, it's not that simple. The escrow holders can't just say, oh, yeah, no problem. Let me just write you a check. There has to be documentation. Everybody has to agree how that money is being dispersed if it doesn't consummate in the real estate transaction, right?
Absolutely. Robert, you as a real estate agent, you're bound by the Association of Realtors, by the Real Estate Commission in the state of New Jersey, correct?
Right, correct.
We as title agents are bound by the Department of Banking and Insurance in the state of New Jersey, what we know as DOBI. So we all have licenses to do what we do, just like you have a real estate license. We are bound and have fiduciary duty to go and protect all those parties involved. So those rules are very, very important for us to follow. It protects our license, the company's license, and that's why those things are in place, those guardrails.
Yep. So we're moving through the transaction, right? You're holding escrow for a particular buyer. Then you're coordinating. Now the buyer's getting a mortgage, right? So now you guys are also communicating with the mortgage company, right?
Correct.
Waiting for them to, make sure that they're okay with the title report that you guys have reviewed, because sometimes they're not, right? Sometimes they have questions about stuff that you guys have to clarify and make sure that they're okay with it, because they're the ones putting out. They're the ones putting out all the money. Right? I mean,
no, you're absolutely right. So basically, when a lender becomes involved, there's two different forms of title insurance policies. You have your lender's policy and your owner's policy. The lender is the one requiring this title insurance policy because they want to protect their money that they're lending to this new homeowner, this borrower. They want to ensure that they're in first lien position and they're going to get paid back the money that they lent for this particular mortgage. So they have their own rules and set of circumstances that we need to follow. So when the day of settlement comes, we get mortgage instructions that tell us exactly how to prepare the settlement statement, the ALTA form, to make sure that everything is done the exact way that they structured their loan, so that taxes are set up a certain way, that anything else that needed to be paid on the day of settlement, that everything is down to a line item. It needs to be exactly set up a certain way, and the lender will dictate that. But they very much are involved with what they're okay with, and every lender has different nuances again and different circumstances and things that are more important to them. But again, it's our responsibility to work with all of them to make sure that we get them exactly what they need in a timely fashion, and that we're professionals along the way, so we all get to the settlement table happy and ready to go and transfer this property to the new homeowners.
Right. So then, just to kind of paint the picture, first of all, for those of you watching this who are not familiar with this process, are you getting the picture that there's a lot of details here, right? And a huge responsibility, right, of what's going on. So now you're coordinating that. And let's just say the day of settlement arrives. So now let's just use an example, right? We said a $10,000 escrow. Let's say it's a $500,000 house changing ownership.
Okay.
And the buyer's going to put down $100,000. You have 10, right? The buyer has to bring 90 to closing, whether it's through a wire transfer or a cashier's check, which has its own set of rules, right?
Absolutely. Now more than ever.
Yes. Because those of you watching this that were like, what are you talking about? Spoiler alert. the thieves have figured out how to create fraudulent cashier's checks. So now that has created another level of due diligence to make sure that doesn't happen again. So it's just this crazy world that we live in, right?
And it's
So
always changing, and they're always figuring out different ways to get ahead of the pack and try to go and cheat somebody. So
yeah,
all of us need to do our due diligence to stay ahead of them, which is a difficult task, but it's our job to protect all the parties.
yep, exactly. So now that buyer is bringing $90,000, right?
Mm-hmm.
You guys have to take the 10,000 that you have in the escrow account, because I know those funds can't be commingled. That has to be moved somewhere else into a different operating account or disbursement account, I guess, in your world. And all the mortgage papers show up via email. They all have to get printed. They all have to get signed. Usually, could be give or take 100 pieces of paper for a mortgage package, right?
Sure can.
It will require your team to make sure all of that's signed properly. And then the lender usually has to approve that everything has been signed properly. At the same time, now the seller is due some money. You had to make sure any of the liens that were on the property were previously extinguished or being extinguished through this process. Maybe they have $100,000 mortgage. You have to make sure that that's valid, and then you have a timeline to get that 100,000 to that lender, right?
Absolutely.
Because there's per diem interest on all of our mortgages, right?
Absolutely. Yes.
In some cases, like you had kind of hinted at this, and I've seen this many times, the mortgage company may require that the buyer pays off a couple of credit card debt through this process because of their debt to income ratios. So there may be line items for different credit cards that checks are being cut through the closing process, and your team has to make sure that those credit card companies get paid because it's all part of the approval for that buyer to get that mortgage to buy that house. Does that make sense?
You're exactly right. And it can be a lot. It can be convoluted. The closing disclosure can be, it's lined out however the loan and however the purchase needs to be, but it can be that complicated sometimes where you have to make sure that there's this many checks. Where in hearing you say all that, and it's just a reminder of banks do love us as clients because of how much money does get transacted back and forth, how many checks we have to cut every single month with every single deal that we close. It's very complicated. But the accounting side of things and making sure that you're working with professionals and that the settlement officers who conduct these settlements know exactly what they're doing and that they're balancing a sheet back and forth down to the penny. That's exactly what we do day in and day out. But it's so very important to every single transaction.
It's so funny, man, because like inevitably, probably half the closings I go to, I'm going to say every closing I go to, I always we always make sure I call it the pole position. I always, we walk in and I always tell, assuming I'm on a buyer side, because a buyer is much more complicated than being a seller. And I always say, okay, have a seat either here or here, which is closest to the closing agent, because you need to be in pole position because you have a whole bunch of stuff to sign, right? And then during the course of the transaction, at some point, the buyer may turn to me and they may go, "You're not doing anything?" And I'll go, hey, first of all, my job is to get you here, to get you to this point over the last many months, sometimes a year or more, to get you here. Now that we're here, this closer, he or she, they're the boss. They're in charge.
Exactly right.
That closer's going to tell all of us what to do. So if you need me, I'm here. And I'm not playing games on my phone. I'm just maybe catching up on emails or something. But there's not much for me to do physically at a closing.
You can't sign for them.
Right. I'm just kind of a coach in a way, for moral support. But the goal, I always look at that. The goal of the real estate agent is for a buyer, let me get you here. Once you're here, I'm good. Now that professional is going to take over and I'm just here for moral support.
Let them do their job. Exactly right.
Yeah. And there's a lot to do because I don't know, I've been to thousands of closings. It's the organization that goes on. And that's just one glimpse of, what we see, because the way you guys are set up, at least at the office that I go to in Mount Laurel, you have the closing suites, which is a beautiful presentation for the buyers and sellers. You just do a really nice job, but none of the other work really goes on in that area. Hey, I lost you, buddy. All right, guys, we're back. Sorry about that little glitch. But we were talking about really the settlement suites are for the client experience, right? I don't know. You may have different terms you guys use on your team, but to me, it's about the
No,
client
that's
experience,
you
right?
hit the experience is everything, Robert.
Yeah,
What we consider the premier settlement experience.
there you go. But in a different section of that building that I'm familiar with, there's a whole lot of other work that gets done. All that other work that we talked about basically is happening behind the scenes to result in the premier experience, right?
Absolutely.
Yeah. Yeah. So there's a
We
lot.
try to keep those things separate because all the hard work, hopefully, it's been done by the time you get to the settlement table. That's where the celebration should occur. It took a lot to get there, from everything that the lender has to do, from anything we had to do, from clearing up all those liens and judgments that we talked about earlier, any of the negotiations that you had to handle with your
Yep.
cooperating agent, all that stress, the appraisal, the home inspection. Hopefully all of that is wrapped up. Not always, but hopefully it's all wrapped up by the day of settlement. So we want the settlement suites and that side of our business to be a little bit more fun, hopefully a little more relaxed. It certainly can be stressful, buying a home, which is the single biggest purchase of a person's life. But hopefully they can have a little bit of fun. They can relax a little bit, and they can, enjoy themselves as they make this purchase and move into their dream home.
You mentioned the word fun, so I pulled up Court Title's Instagram account, and you guys, I'm not a close follower on Instagram for anyone, truthfully, but I'm pretty familiar with what goes on in your office because my goal is to be there as often as possible, right? The more closings, the better.
Absolutely. Yes.
But you guys always seem to do a really nice job. In fact, I was there. What was a fun one recently? Oh, I was there on Thanksgiving,
Halloween.
not Thanksgiving, Halloween. Yeah, I was there
Yeah,
on Halloween.
Halloween.
And I saw you guys have put up some videos with that. Oh yeah, there's an image right there, right? Or it's actually a
Yep.
video.
Yeah.
So you don't see that in a lot of places, right? Like I think so. Tell me, just take a minute, and then we'll wrap about like the concept behind the culture that you guys have created at Core, and why is that important?
And Robert, thank you for even giving me the chance to even bring this up. But like at any company, it doesn't matter if you're a title insurance company or if you're, working at a real estate agency or if you're at a bank. It's the people, really. It's the people that comprise the company that do all that hard work, that make all that magic happen on the other side that we were talking about. It's them that allows us to be what we are, to do what we do day in and day out. So celebrating the folks who we look at as our family at Core is important to us. So as you're scrolling through that thread there, we're acknowledging birthdays and anniversaries, and we try to make it a fun environment to come to work in every day. What we do is very serious. It's important, but that doesn't mean you can't enjoy yourself. You spend so much time at work, we all do in this country, that it's important to make sure you appreciate those who work beside you, and to know that those who you work for appreciate the efforts that we all bring every day.
And I would say that I would take that to another level and say that culture that you guys have transcends into the client experience, because
It's all part of it.
Yeah, it's all interconnected, because obviously I had a closing and the closer was wearing a costume, and that was cool. It was Halloween, right? Recently. But even more so, that even like the extra things that you do for clients, where certain times of the month or certain times of the year there are food trucks outside, and there's always snacks and beverages there, and then there's
Of course.
themed stuff going on. Maybe there's like a week where you guys have like fresh vegetables, like fresh corn sometimes, right? For
Absolutely.
people to take with them on their way out. And that's pretty cool. And the other thing I think is pretty cool too is I think you guys recognized early on, and maybe it's because you're all dog lovers too. I know Annie is. I don't know about anybody
I
else.
am as well. We all
Okay.
are. We all are.
Like, whenever, people are moving, a lot of times they're buying and selling, and there's a lot of stress going on. And then they worry like, oh my God, I have to go to a closing, and they're stressed and they haven't slept, and they've got maybe a moving truck waiting in a driveway somewhere. Like, I don't know what to do with my dog or dogs. And you guys from day one have said, bring the dog to closing. Like, we don't care. And you have treats there for the dogs.
We sure do. We sure do. They're a part of the family as well. But
yeah.
You're hitting on, by the time you get to settlement, so much stress has hopefully been alleviated that it should truly be a celebration. All of these little extra things that we do are just our way to go and try to celebrate the day, to show what an important occasion it is when you buy or refinance a home. You don't do it often in your life. So those few times that you do, they should be celebrated. And it comes down to those little pieces of extra. Most people don't realize that the title insurance fee you pay is the same no matter what title insurance agency you work at. It's regulated by the state, so you're going to pay the same exact rate down to the penny. So working with a company that treats their team the way that we try to treat them, that we treat our customers the way we try to treat them, to us, that's very, very important. And it's what differentiates us from, the others out there.
That's
Something that's very important
point.
to us.
I'm going to repeat that because I've had, and it doesn't happen often because buyers really don't even want to begin to try to figure out like who they want to work with. I believe most of your business is built on relationships through real estate agents and attorneys, and because oftentimes people are like, well, just order it from whoever you need to order it from. But what's really important is for those people out there that are saying, well, maybe I'll look around and I'll try to figure this out. I'm like, it's not simple. It's not like car insurance. It's not but the reality is the industry is so regulated that the fees, the bulk of which is really the title insurance policy. The other stuff is so insignificant that the differences from one company to the next in your industry is pennies. Often it's really it's insignificant.
It's right? That's exactly right, Robert.
Yeah. And I find, and I mean, look, I interact with tons of title companies because I work with sellers and buyers. And when we're on the seller side, we don't choose the title company, right? Your company helps us process our seller paperwork, of course, but the buyer's side picks the title company. And I probably work with just about every title company in our area. And there is a huge difference in the levels of service and professionalism from one company to the next. There are several that are very good. We know that, right?
Yep.
I'm really not bashing anyone, but there are some that it's just terrible. It's a terrible experience right through the closing, like a bad experience. So company culture, I think, is a huge piece of that because you see that when you read about corporations and businesses, the most successful ones are where if you enjoy going to work every day, it makes everything better, right?
It's going to shine through in the emails that you write, the way you answer the phone, your interactions with not just customers, but your teammates who work beside you. All of that's connected. And that's why we do what we do. That's why that stuff and the culture that we've created is so very important to us.
Yeah. It's so easy to not pay attention to that stuff. Like as a business owner, it's easy to be really focused, like acquiring new clients and making sure your bottom line numbers are working, because culture is a soft thing. It's hard to put a value on it. But for someone like you and your team and your partners, you guys realize that if you put attention to it, then ultimately it creates more business because it just trickles its way right through the entire experience.
Exactly right. Exactly right.
All right. All right. Closing thoughts. What else do people need to know about title? I know we talked about a lot today, Justin, and I really appreciate you taking the time.
And I appreciate the opportunity to talk about this with you, Robert. We at Core, we do business in 4 states. We were founded in New Jersey, but we also do business in Pennsylvania, down in Florida, and in Michigan. For those of us who have questions about us, want to see a little bit more, you can visit us at www.coretitle.com or find us at Core Title on most social threads as well to go and find some other instances of the fun and the culture that we've created. We welcome extra followers, but it's been a pleasure to be here today and certainly talk about what we've talked about and hopefully answer a little bit of some of the unknowns and answer some of the questions that people have about an industry that is, lesser known for sure.
And I'll make sure to have all your contact information down in the description below on YouTube and on other social media channels. So if you're curious about something title related, your information will be down there. They could reach out to me as well. I can make an intro, whatever makes sense. Any you guys watching this, if you need any help buying or selling or closing on a property here in Southern New Jersey, reach out. All the info's down there. In fact, if you're looking for a qualified real estate agent anywhere in the country, reach out to my team as well. We'll be happy to make an introduction. Justin, thank you so much.
Thank you, Robert.
All right. We'll talk soon.
Bye-bye.